Kind of an indeterminate day. We're waiting, obviously, for the G-20 meeting to occur on Friday. Right now, you can see semiconductors up. That's a very good sign overall, given some of the concern that we've had. And bond proxies, REITs and utilities, flattish on the day. Some of the other ones that are out there, banks generally flat to down as well here. So not a lot of strong action here. I just want to highlight what's going on with some of the semiconductor stocks right now. We see most of them slightly to the upside. I think it's important. The Commerce Department on Friday hit 5 Chinese companies saying they wouldn't be allowed to buy U.S. technology anymore here, including a partner of Advanced Micro, one of their joint venture partners. But you see it's not really affecting them at all right now. If you take a look at the markets right now, Art Cashin famously said 2 months ago we were one tweet away from a new high and one tweet away from a 10% correction. And he was right, and that's exactly what happened. So here's the 10% correction here on the concerns. This was May on the concerns about the trade deal falling apart. That's about a 7% move to the downside. And then here's the rally back. That's about an 8% move to the upside on Fed backing, the European Central Bank backing, as well as optimism on the trade deal. So up and down, we got a V-shaped recovery, essentially, and kudos to Art for getting the tone exactly right on that one. Where we are in the markets right now, new highs on stocks, advanced decline line. This is the most important thing. This is what I watch. When you have an AD line at a new high, that means more stocks are advancing than declining every single day. That's the most important thing to keep the rally going overall. It's the single most important indicator I watch. New highs, I would say they're advancing modestly, not aggressively. We got a lot of super cap names strong, and that's keeping the markets up overall. As for calls of the day, I think the most important was Morgan Stanley made a big call on energy. You know, you've got all these geopolitical concerns. Morgan Stanley actually reduced estimates on price targets on a lot of big names here. Oil exploration production, gas exploration production, integrated oil reduced at only 2%. But their comment is pretty clear. Deflationary pressures is going to be having an influence on energy stocks for a long, long time. Here's some of the big names in the exploration and production space. They're down. But I want to point out energy's gone nowhere for a decade now. If you look at the XLE, which is the big ETF for energy, this is 2007. We're essentially... Let's go back over here. We're essentially back to where we were in 2007. Gone nowhere for the last 12 years. So everybody already knows how small the energy space is. It's only about 4 or 5% of the S&P 500. Just want to note quickly, 9 IPOs this week. The Lollapalooza continues with the IPO space here. Real big luxury retailer. They're going to be coming. These retailers have done very well. Chewy's done very well recently. We've seen some of the other ones like Revolve, which came a couple of weeks ago. They did really well. And finally, we're going to get a big healthcare ETF on Friday over at the NASDAQ. That'll be a $750 million deal. That's Change Healthcare. So that whole IPO business continues to do really well.